Hello and welcome to another live trading session. Today is October 11th and we're going to have a look at our account. So at the moment, market is down, just slightly. It's been going down for quite some time, and then we had a nice all week. We've been going up. Right now, we're here making up our mind, but that's all pretty irrelevant to us. As long as our metrics are in line, we'll continue to put trade on. Let's take a look at the VIX 1672. So 1672, slightly under from yesterday when I took the metrics, and Delta 80, Theta 50, so 80 and 50. Not a huge change there. Buying power usage is, let's refresh it, and MES 23.7. 23.7, not a lot of change there. Netlick is about the same, and we currently have 17, as you can see here, 17 trades open, so this will turn green. So according to all of this, we are in a good shape to put on another trade. Buying power, we have some room here. We could have a few more trades. So let's go on and take a look what we can do there. So MES, and we'll probably go to this 79 and see what our 9. We already have a rate here at 9. I don't really like to overlap trades. Let me just see if we go further down. 100 days, that's a bit too much. So here we can just accept a little bit less money or go for 10. Or we can just, well, let's go ahead and try. Let's go ahead and try and get a little bit more money here just to see. The market is wiggling around negative territory. So let's see. No, it's going to be too low. Just a second. Oh, no, that's in this one here. We're going to cancel this one. And we're going to go again. Take a look here. We could definitely go here to 21. That's 10 delta. So that's right in our neighborhood. So let's go ahead and do 2 of these. But the market is getting ahead of us. So no. Okay, 21.25, and then we go to the 50. That's closest to 2/3 of 79, and let's go to around 10 delta. 4,000, so 3,700 would be our default. So we already have one right here, so let's put it here. So 10.25, and that sounds pretty good. Let's just see 10. No, let's just do this, and let's go like this. We're gonna have to pay up a little bit here, and place the order slightly up. And there you go, we're closed. So let's record this trade so you can also see how I go about that. So we go to this tab here. This is trade 18, and let's group it. Trade 18 just for a second here, so that we have everything nice and neat. So this here, right, we're gonna call it naked put 18, and then we're going to group these two PDS. We're going to call it the PDS 18, so we can always put them together when needed. By the way, let's take a look at our trades here. 78%. Okay, this one is getting close. 69, 67% profit. 37, and then the newer ones have they're all in profit, so that's good for now. All of these PDS here, 1, 2, 3, 4, 5, 6 of them, they're all attached to these naked puts right here. So if we go here, so the VIX at the time was 1669. The MES was 43.91. This is for analyzing purposes later on, because we always want to work on our trading plan, slightly improve it. So over time, as you compare the different entrant points and what worked better, what not, you can fine tune and polish your strategy. So let's take a look here. We got 4,037.10, 4,037.10, and then we had on this one we had 3900. 3900. I know sometimes it's annoying, this back and forth, but you know, it only takes a couple of minutes and then you have it recorded. 1050 is what we paid, and 2125. So 1050 and 2125, and I think we were the 50 and 79 in DTE. So 50 and 79. There you go. So this is week 41. I already placed a couple of trades, I think yesterday and day before. So we have 3 trades for this week. That's, you know, that's right around where we would hope to be, 3 to 4 trades depending on the week. So this is now recorded, and on our negative delta trades, we have used up all of the credits from 12 to 15. So on this Friday, most likely, we will see how much we sold in trades 16, 17, 18, and if we put any more trades, we'll use up a portion of that credit to put another small grind down hedge or some protect, not hedge really. It's a little trap to get the market if it goes down, to get some negative deltas and to get some help if the market pulls back a little bit in the coming weeks. I'm also thinking about adding to the plan some other negative delta trades, but I have to run some back tests and work on the plan and see what that might be, but something I'm working on. I also reduced the bill exposure a little bit. Let me just close this. Bill is the ETF here that holds treasury bills, because I was paying interest here on the pending margin interest, and that's because I had too much of these bill, using up all my cash. So for overnight wiggling of the futures, the broker would just charge me interest on the money that they need to use that for the futures. It's not a lot of money, but it needs to be available all the time, and it's kind of hard to find the balance where you stop paying the interest, and then that would be a cutoff point. I'm at around 80% right now. So if you take a look, I have the around 38,000 worth of T-bill on a 49 or some, say 50 K account. So somewhere in the neighborhood of 80%. And I'll leave it here for some weeks to see if this charges are going to go down or not. And if they don't, then I'll go down to 70% until I find a sweet spot where I'm not paying any interest to the broker and collecting some interest on the bill. All right, and the market is now slightly up. But that's all I have. I'm not going to be putting any more trades today. And thank you for watching. If you liked it, if you find this helpful, please like and subscribe. Thank you. Have a good one.